Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report that's surprisingly dull at first glance but packs a secret punch. Think of it like that unassuming accountant who can actually shred on guitar. Bet you didn't see that coming. Kimecha Debt Fund and Global Bond Fund have performed over the last 6 months. Lots of fund expenses, analysis and bond values ahead, so get ready. We've also got a Discord community linked in the description below for all your questions. DIF Fund and Global Bond Fund have performed over the last 6 months. Lots of fund expenses, analysis and bond values ahead, so get ready. We've also got a Discord community linked in the description below for all your questions. First, we are seeing reports to the stockholders. This includes a whole bunch of semi-annual shareholder reports for different classes of the Emerging Markets Debt Fund. You've got the Investor Class, I Class, Y Class, and so on. The semi-annual reports contain details about the fund's performance between November of last year and April of this year. So basically, a recap of what these funds have been up to. Now let's dig into one of these reports. Taking a look at the Emerging Markets Debt Fund's Investor Class, we see some key stats. One interesting area is the fund cost. Imagine you invested $10,000. The costs for the investor class would have been $47 over the last 6 months, which is 0.94% of your investment. So not too bad, but definitely something to keep in mind, especially when comparing with other funds. The fund's net assets are a substantial $581 million. This gives you an idea of the fund's size and reach in the market. Keep an eye on management fees. It can make a big difference in returns. During this reporting period, it was about $523.902. That's a lot of money changing hands. The portfolio turnover rate is 66%. This tells us how actively the fund managers are trading the investments within the fund. A higher turnover rate can mean more transaction costs and potentially more short-term gains, which depending on your situation could be either good or bad. Finally, the fund has about 153 holdings. This number tells you how diversified or spread out across different investments the fund is. So what kind of stuff does this fund actually invest in? This is the fund holdings. Most of the fund, about 79%, is in sovereign governments and agencies. That means they're lending money to countries and their related organizations. About 15% is tied up in corporate bonds, basically lending to companies. Everything else is kind of small, a bit in US Treasury securities, convertible preferred securities, and some short-term investments. It's worth noting that about -4% are other assets and liabilities. % are other assets and liabilities. The fund owes slightly more than it owns in these assets. Here is more information on how you can dig deeper about the fund. This same semi-annual shareholder report format is then repeated with the key numbers tweaked for the I Class, Y Class, A Class, A Class, A Class, A Class, RC Class, and G Class. So next up, we have a similar looking report focusing on the Global Bond Fund. This fund also has a collection of classes, Investor, I, Y, all the way through G. For the investor class, it costs you about $43 for every $10,000 invested over the last 6 months, which is an expense ratio of 0.85%. You need to consider your costs as these expenses have a real impact on investments. The Global Bond Fund is a significantly larger fund than the emerging markets one. Its net assets are around $2.8 billion. This means it has a much broader reach and influence in the global bond market. The management fees are about $2.5 million, which are distributed throughout multiple classes of these funds. The Global Bond Fund has a portfolio turnover of about 59%. It's fairly high, signifying that there were some aggressive trading strategies. How are these assets? A big chunk, about 29%, is in corporate bonds, very different from the emerging markets fund we saw first. Another 22% is in US government agency mortgage-backed securities and 21% in sovereign governments. These are your basic lower risk investments. If you are interested in this fund, make sure to check their website for information and documents. They can be very helpful when finding an investment. The remaining are similar, the semi-annual reports with each class detailing the numbers. They continue sequentially, the same way that they did for the Emerging Markets Debt Fund with the I Class, Y Class, A Class, and so on. Okay, now we finally get to the actual financial statements. This is where things get extra real because you see how the fund actually calculates its numbers. I won't read all these numbers because they will bore you away, but I will do what I always do and highlight some key numbers that can affect regular people like you and me. We skip directly here. This part gives us a detailed look at what the fund actually owns. This includes amounts and the values for items like Angola Government International Bonds, Argentina Republic 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 Government International Bonds, and much more. Here's the big picture. The Global Bond Fund has close to $3 billion in net assets. A big chunk of that, over $600 million, is tied up in US government agency-backed securities. The Global Bond Fund saw 70 with a B, not million, not billion, and not trillion, just 70,000 in net profits. Looking at the currency section to analyze the hedge strategy, we see USD is sold for SEK, or in other words, they are shorting USD and longing Swedish currency. At the end of the day, the fund's net assets were a whopping $2.89 billion. Now we arrive at our financial performance analysis. Net asset value for the investor class, which is the normal trading account, has a total return of 1.93%. Basically the same conclusion, and this time that's it. You can find additional filings if that's what you are interested in. So what's the big picture here? These funds had a mix of strategies. It looks like the fund is trying to generate modest income during an environment of uncertainty. Expenses and high turnover are major detractors that you hopefully are able to make up for in gains. For your investments, you will want to analyze their annual operating data, not the semi-annual, to see if it's worth investing. You will probably want to check the ticker symbols and just manage your own portfolio if you are really about it though. I think it's not performing great, but if the market crashes, those bonds might look a lot sexier as a safe haven. Now let's turn this over to you. What do you think, looking at the numbers, about the direction of these funds? What might make them look more attractive or make you less comfortable? If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, don't forget to check out the Discord in the description. Thanks for watching. See you next time.